Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aiman Shafi and today I will explain to you guys about the accounting policy. Accounting policy is the internal policy set up by the entity to process, measure, recognize, record and disclose about any specific items or transaction regarding to the financial statement. However, some of the company might slightly have different in their accounting policy, but they are still bound to the international accounting standard or any local standard bodies regarding to the financial reporting purposes. There are so many policies in this accounting policy, but today I will talk about accounting policy of inventory. There is three methods of accounting policy on inventory. The first one is first in, first out, as known as FIFO. The second one is last in, first out, also known as LIFO, and the last one is average cost. But today, I will only talk about two of them, which is FIFO and average method, because these two methods are related to the company that we choose, which is Powerroot Berhad and Nestle Berhad. So, for the first company that we choose, which is Powerroot Berhad are using first in, first out method. In this method, I have found two advantage and one disadvantage, and I will talk about the advantage first. The advantage of using this method is the company easily to separate the cost, and the second advantage for using this method is the company can track all the transaction by using the dates, the types of item and the cost of item. But as a normal method, there is always have the disadvantage. The disadvantage for using this method is the company need to incur a large amount of money and labor cost. This is because this company are run by the software and the company need to buy the software first. But the company also need to prepare the employee to run this method. So, regarding to that, the company will incur a large amount of money and labor costs. So, for the second company that we select, which is Nestle Berhad. Nestle Berhad are using average cost method. Average cost method will help this company to save some amount of money and will help the company to use a little amount of labor cost for running this method. But this method will have cost some effect of the company. So the first disadvantage of this method are the company are hardly to assign separate cost of the item, and the second one is the company will lose all the database regarding to the inventory because this method are assuming all the inventories are paid in one amount, which is one-off. So personally, I recommend this method for those company who want to save their costs, and I will not recommend for those company who want to take care of their database regarding to the inventory part.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Arena binti Abdullah, MDA 1901026. Today, I will explain about accounting concept. What is accounting concept? Accounting concept is a basic rules and principle which function as the basis recording of the business transaction and also the account preparation. As an example, business entity, historical cost, and also materiality. I will explain further regarding this example. The first one is business entity. What is business entity? Accounting concept, business entity states that a business and its owner are two separate legal entities. As an example, private and personal incomes or expenses of the owner should not be treated as the expenses or revenue of the business. Next is historical cost. Historical cost states that assets should be recorded on the balance sheet at the cost price and not the current value. As example, cost of fixed asset are recorded at the date of the acquisition price that includes all the charges incurred to prepare the asset to be used. The next aspect is materiality. Materiality states that immaterial amount can be aggregated with the amounts of a similar nature and thus not required to be present separately. It depends on the size and nature of the each item. As an example, cost of postage and buying the stationery can fall under the small payment, and it can be recorded aggregately and should not be separated. It can be aggregated into a sundry expenses. So, based on this accounting concept, our chosen company applies all the example that I have explained just now. Both of our chosen company, which is Power Group Berhad and Nestle Berhad, use business entity, which is their business entity and the owner are a separate legal entity. The second one, they use historical cost to present their fixed asset. And the last one is materiality. They aggregate all the small payments and aggregate it under the sundry expenses.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Fikir Benyari. I am from DIACSB. Today, I like to present my presentation in financial statement analysis. Okay, my part first is accounting basis. Okay, what is accounting basis? Accounting basis is refer to the method under which revenue and expenses are recognized in financial statement. In accounting basis, have two main. First, cash accounting. Second, accrual accounting. Okay, for cash accounting basis recognize the revenue and expenses in the order in which they are received or met. Okay, for accrual accounting basis match revenue with the expenses that generated that revenue. Okay, in accounting basis, as an example, for cash accounting and accrual accounting. Okay, first, for example, in cash accounting basis, when the company buying office supply, the company typically pay cash for them. Okay, for accrual accounting basis, you would record revenue when a project is complete rather than when you get paid. Okay, I like to present the application in accounting basis. Every company may use the accrual accounting basis since it is the requirement for the auditor to audit the financial statement. Okay, my assignment choose Power Group Berhad and Nestle Berhad. Okay, for application accounting basis in Power Group Berhad, the interest income is recognized as a accrue using the effective interest method in profit or loss, except for the interest income arising the temporary investment of borrowing taken specifically for the purpose of obtain qualifying assets. Okay, second, the interest income recognize revenue when earn the sales and recognize when incurred the sale. Okay, for the Nestle Berhad, finance income is recognized as it accrue when the effective interest method in profit or loss. Okay, the system disclose correct profit or loss for a particular period and also exhibit true financial position of the business on a particular day. Okay, next I like to present the accounting estimates. Okay, the accounting estimate is an approximation of the amount of a business transaction for which there is no precise means of measurement. Next, the estimates are used in accrual basis accounting to make a financial statement more complete. Okay, for example, in accounting basis, first, a loss provision for an environmental damage claim. Second, a loss provision for a bad debt. Third, a loss provision for warranty claims. Okay, the application in Power Group Berhad and Nestle Berhad. Okay, first, the Power Group Berhad. Signification component in individual assets are assessed, and if a component have a useful life that is different from the remainder of that assets. Second, the property, plant and equipment under the construction are not depreciated until the assets are ready for their intended use. Okay, the depreciation method useful life residual value are reviewed at the end of reporting period. Okay, for Nestle Berhad, depreciation is recognized in profit or loss on a straight line basis. Okay, second, estimate useful life of each component of an item of property, plant and equipment from the date and they are available to use. Okay, last, depreciation based on the cost of an asset less its residual value.
So now we move to the financial statement. The first element in this financial statement is statement of comprehensive income. Kindly to remind to you guys that a full set of financial statement need to consist of 5 elements, and if one of them are not in the financial statement, the financial statement are incomplete and unreliable. So back to the statement of comprehensive income. Statement of comprehensive income is the summary of a asset and liability of the company. So there are a few items that can be found in this statement, such as the revenue, the expenditure, the gain and the loss of the company. So this statement usually will be the overview of the financial statement of the company.
Next, I will explain about criteria needed in preparing the statement of financial position, or as we call it as SOFP. What is SOFP? SOFP are usually prepared at the end of the accounting period. Since our chosen company is Nestle Berhad and Power Root Berhad, they use 31st December as the end of their accounting period. In financial position, they recorded the assets and the current asset and the non-current asset separately. This is important in order to differentiate the nature of the asset. As we know, in statement of financial position, there are also non-current liabilities and liabilities. They are also recorded separately according to their nature. Is the other items such as investment and all of that kind of thing are recorded also in this statement of financial position.
So next, we move to the statement of change in equity. This statement is the reconciliation of the beginning and the ending balance of company's equity during the accounting period. This statement is not the main core of the financial report, but the company need to include this statement in order to complete 5 elements of the financial report. Due to the factor that this statement is not the main core of the financial report, some of the company does not prepare this statement in every month, but in some cases, some company has their own some extension to make this statement in every month. So there are some items that can be found in this statement, which is the profit and loss of the company and the dividend payment.
Okay, next, I'd like to present the criteria notes to the account in financial statement. The criteria notes to the account financial statement have 9 criteria. First, the basis of presentation. Second, the accounting policy. Third, the depreciation of asset. 4, valuation of inventory. 5, subsequent event. 6, intangible asset. 7, consolidation of financial statement. 8, employees benefits, and the last one, contingent liability. Okay, I present 5 of 9 in criteria not to the account in financial statement. Okay, first, the basis of presentation. Okay, the first section in the financial statement must explain the basis of preparing and presenting the key in financial statement. The accounting policy. Okay, the accounting policy section provide information on the accounting policy adopted by the management in preparing the financial statement. Disclosing the accounting policy help user interpret and understand the financial statement better. Okay, number 3, depreciation of asset. Depreciation refer to the reduction in the value of an asset over time due to normal wear and tear. The assets depreciation section provides information in the method to adopted by the company when depreciating the assets. Okay, number 4, valuation of inventory. The valuation of inventory must inform user how the company value in inventory, making it easy for them to compare inventory figure from one period to another period. the other company entities. The main section provided information on inventory issue, for example, how inventory amount are stated and the method used to determine inventory cost. And the last one, subsequent event. Information on any subsequent event can be found also in the financial statements notes sections. Subsequent event refer to event that occur after the balance sheet date before the release of the financial statements. How the company handles the event depends on whether they are recognized or unrecognized.
Next, our group are assigned to explain regarding three Malaysian financial reporting standard, which is first MFRS 101, second MFRS 110, and third MFRS 137.
In this Malaysia Financial Reporting Standard 110 should be applied on the accounting and the disclosure of the event after the accounting period. On the part of recognition and measurement, there are two types of event. For the first one is adjusting event and the second one is non-adjusting event. For the adjusting event, the entity should make an adjustment on the recognized amount in the financial statement. The adjustment will reflect the adjusting amount after the event. But for the non-adjusting event, the entity should not make any adjustment on the recognized amount in order to reflect the non-adjusting event. By doing that, the current financial statement will not up to date to the real amount in that entity. So, in this part, in the disclosure part, there are two things that we will discuss on it. The first one is the date of the authorization for the issues, and the second one is the non-adjusting event. We move to the first part first. The date of authorization. The entity should disclose the person who are giving the authorized and the date that the authorization is made. If the owner of the entity itself have the power to authorize the financial report, the owner of the entity itself need to disclose it publicly. Move to the non-adjusting. Even though this part is not adjusting, does not adjust, the company still need to have to disclose two things on it. The first one is the nature of the event and the second one is the statement itself. The statement is any estimation made on this statement are not reliable and cannot be made because this statement are not the actual amount of the statement.
Since our chosen company, which are Power Root Berhad and also Nestle Berhad, these two companies did not apply MFRS 110 and MFRS 137. They only apply MFRS 101, so that MFRS 110 and 137 are not applicable by this company. So, after doing some sufficient research about these two companies, we can confirm that these two companies did not apply the MFRS 110 and MFRS 137. So, as a conclusion, both of these MFRS are not included and not applicable by this company. They only use MFRS 101.
Okay, next I present the disclosure in Malaysia Financial Reporting Statement 101. Okay, disclosure. Prepare of financial statement should consist of this statement, which is a statement of financial position as the end of period. Second, the statement of profit or loss and other comprehensive income of period. Third, a statement of change in equity for the period. Fourth, a statement of cash flow of the period. 5, note comprising signification, accounting policy and other explanation information.
Okay, now I will explain to you guys about the application of the Malaysian Financial Reporting Standard 101. By referring to the scope itself, I can conclude that a full set of financial report must have 5 elements, which is statement of financial position, statement of comprehensive income, statement of change in equity, statement of cash flow, and the last one is note to the financial statement. By complete these 5 of element, the financial report can be done. So, by referring to these two selected company that we choose, which is Power Road Berhad and Nestle Berhad, I can conclude that these two companies have applied this Malaysia Financial Reporting Standard successfully. By that, we can prove that on the Power Road Berhad annual report on page 80 until page 153, the Power Road Berhad company have clearly stated on it that there are 5 elements on it. And back to the Nestle Berhad, from page 48 until page 122, the company clearly state that there are 5 elements on it. So, I can double confirm my observation by referring to the auditor's report. These two financial statements have been audited by the auditor's report, which is KPMG PLT. KPMG PLT is the auditor's company that have a responsibility to audit these two financial report. So, by have a auditor report on it, we can conclude that this financial statement can be used for the external users for any purposes.